Hello friends, welcome to my channel. So what we have seen in the last 1 week of USA market is rather, I would say, a steady week, although we can call it as a tepid week because there is no price movement, and more than that there we have seen a slight correction. So with this, let us start another session of USA weekly market report, because we have ended with one more good week if you are looking at the market with a broader perspective. But meanwhile, right now there is nothing which is happening actually, and the stock is going within a range. The stock which has gained the most, they have started correcting. So it's like where you are looking at. It's not like what you are looking at. So let us see what is happening and what we can expect, because I am neither on the I'm not in the excessive side. If you're talking about the upside or downside, I'm not at all on the excessive side, and so let's be within our limits. So let us see first the news, and then we are going to talk about the charts. And by the way, if you are somebody, obviously everybody do like their weekends, so go and watch, because I will more towards Christopher Nolan because he's one of my favorites. So you can go and watch Oppenheimer. It is obviously, I don't want to know the movie name. I just look at the director's name, and if it is Christopher Nolan, I mean that's enough for me. So if you want, you can go and check it out. Anyways, let's come back to what we have in the market. And I just hope and pray this geopolitical tension fades away, because things are not at all looking good, and it will not, you know it will not have a good impact, and inflation is not going to come down very easily, because the recent developments will obviously cause a lot for the overall global inflation, and it's negative right now. And if you do follow different things, different data points, be it scientific data points, be it geopolitical data points, be it spiritual or astronomical or astrological data points, I mean, I don't find any indication that things are going to fade away very easily. I'm talking about the geopolitics. So that's why I just pray and hope everything good for everybody, whomsoever in which part of the world. And if somebody who has, it does not matter whether it is good or bad, whether you are the sufferer or the suffering, it does not matter, because if you cause harm to others, it can goes on and on and on. So I mean, both parties have to calm down, and hopefully things will get better moving forward. Apart from that, Morgan Stanley credits Bidenomics for much stronger than expected GDP growth. So this is something very surprising. Let's see how market behaves, because stock market will tell you what is actually happening, whether it is better than expected or worse than expected. Yes, we are officially couple of months to go as far as elections, USA elections in 2024. So that's another thing which one needs to look at, because stock market does have the pattern. And if you don't know, you can go and search it on Google about the stock market and the US elections. You will definitely get couple of charts, couple of news, how the market will behave and what the data points are telling you. So this is something which we have. Europe embraces for yet another heat wave as Greek PM warns hard times are clearly not over yet. So this part of area, I mean, this is the cause of natural disaster, and if you are somebody, so do I, obviously, that we are just talking about natural calamities and global warming, but don't have any sensitivity towards it. It applies to all. Then you have to pay, or I have to pay much big amount. I mean, it is not like I'm going to give you $1 and everything will fades away, or because things are there is a huge amount of cost, and over a period of time you have to pay that cost with your life as well. So this is the kind of cost you have to pay for natural disaster or global warming kind of situation. So we have to be sensitive with this issue at least. And obviously everything has a trickle down impact. So if global leaders are talking about it, that's fine. So do they in the last 20 or 30 years. But it's the time when they actually start working on it, rather saying that I should do and you cannot, or you do this thing, I'm not going to do it. So these kind of statements are foolish. It does not matter who is saying, but I mean, developed economies or developing economies, if you are not doing anything, everybody has to pay the price. Apart from that, let's see what else we have. Yes, Indian rice export ban could send decade high prices spiking even further. So this is one of those costs you have to pay because of the geopolitics, because the ongoing geopolitical tension between Russia and Ukraine definitely hit the price of grains much higher because of the delay. It's not delay, but Russia actually pulls out from the deal. So it is something which is good for certain stocks, but not at all good for economies, and more specifically about the people. What else we have? What else? So I think this is most of it. So let us go and see what has happened in the market and what else we're going to look at as far as the price action is concerned. Okay. So Dow Jones was flat to positive. I mean, only 2.5 points in the last day of the trading session last Friday. Nasdaq down by 30 points, and S&P 500 was flat with 1 point positive. Gold at 1963. So 1930 or in between 1900 and 1930 for gold is actually working as a good support. Oil at 76. It's been trading in between 70 and 80, which is I think a good range to look at. If it does not move beyond $80, then it is fine. Obviously below $70 much better. Everybody wants to pay less. Apart from that, what else we have? Yes, I think there is a spike as far as the short-term treasury yields. I mean, this is a real indicator. I do trust bond yield indicator, because this is one indicator which is hard to manipulate. This market is hard to manipulate, and the short-term yields are continuously trading above 5, quarter 5, or 5.25, or more than nearly 5.5%. So this is a good yield which you are getting for your short-term maturities. And when you have risk-free yield of 5% within a month, why should I bother about rest of the things? And those who have a huge amount of money, they're happy. I mean, if I make $500,000 out of $1 million, so that's a good amount of money that you are minting, and this is a risk-free money and you are getting it within a month. We have a slight increase in the dollar index, so I'm going to talk about the dollar index. So we will start our analysis with the dollar index, but obviously for the short term, or what we can expect in the next 1 week. And for the bigger trend, I have recently uploaded a video on a big price chart, or next price movement for dollar index, where we have seen a big crash. So you can go and check it out, about the dollar crash video, which I have uploaded very recently. So let's start our analysis with the US dollar index, and let us see what is happening over there, so we can get a sense about the price movement in the Wall Street for the upcoming week. So let's go to the hourly chart, and this is what one can look at, because there is a big downtrend which has started. But when you are looking at the segment of a chart, so nothing will go at a stretch, whether you are talking about the upside or the downside. Right now, although the overall trend is on the downside, but for DXY, with a stop loss of 98.9, it is now moving somewhere in between 102.5, and we have 103. So this is where the dollar index is actually moving, or what one can expect in the next week for the dollar index to move. And then we will take things from there. Obviously this is happening in a downtrending move, and the price chart we have is like is an expanding gramophone, and this kind of gramophone is not at all positive, because this is 1, this is 2, this is 3, and this is the fourth up move. After that, you will potentially have a move like this. So I mean, for the very short term, yes, there may be short end correction or consolidation, but it does not give us that hard feeling that now a crash will happen. Probably not. The potential of a big crash, or the probability of big crash, is low right now. Then we will take things forward. After that, let's start by looking at the S&P 500. So this is the price chart of S&P 500. So I'm just discussing about the trend for the next 1 week in this video. I mean, I do talk about different perspective, because different chart gives you different perspective, or different time frames of a single trend will give you different perspectives. So for S&P 500, as we can see that there is a potential up move in the dollar index for the next 1 week. So we can see an opposite move in the equity indices. So for S&P 500, there is a support at 4471 or 4470. From there we can take things forward. But if S&P 500 falls below 4470, then we can go for bigger downside. But as of now, this is an uptrending range in which we have a correction, and the trend is looking something like this: 1, 2. This is the 3, this is the fourth move, after which you have the fifth move. So this is something. So I mean, this is an opportunity, and focus on 4470 as your next support. Apart from that, if you are looking at Dow Jones, so I think when dollar index is going higher, every index will move lower. So this is what we can expect from dollar index, and for beg your pardon, for Dow Jones. And Dow Jones also indicating some sort of correction right now, and this is what we have as far as Dow Jones is concerned. So it may move lower, and the support which we have moving forward will be 34,700. So actually there are two support levels. Okay, so because Dow Jones is not a very volatile index, so this is the first support. Let me show you the first support, which will be at 35,110, and if it falls below that, the second support will be 34,724. As far as Nasdaq is concerned, yeah, this is what we have. So similar kind of pattern: dollar index going higher, equity index is going lower. So you can make a pair trade, and you can earn from both side. So I mean, go long with the dollar and go short with the index. But this is a very short term trade. This is for the next 1 week. And don't try to push your luck because it will cause you a lot of trouble. And this is what we have. So on the downside, you have 13,888 as our support level. Okay, for Nasdaq. If it falls further, then obviously take decisions accordingly. Okay, so this is what we have here. So one thing is very clear, and which is the short term correction or consolidation in the equity indices, and which may continue for the next couple of hours or days, and from there we will take things forward. But there is no point going beyond a particular level. I'm talking about both the side, on the upside as well as on the downside. So you have to be you have to stay within the range. And let's talk about gold, because gold is something. I think gold will, yes, this is also down, but not out, because when dollar index, so this is the rational movement. But I do believe that overall market is going through a transition phase. So when market is in transition phase, you cannot correlate things, because we have seen how even dollar index and equity indices both were going down or both were going higher simultaneously, which will not happen in a normal scenario. But it is happening right now, or it is happening time and time again, which is simply indicating something else is happening. And that's what I'm saying. That's what I'm calling as a transition phase. As far as gold futures, this is a chart of gold future. We can clearly see a price correction, and I'm looking at this chart with the next 1 year's perspective. So there may be a chance that gold futures will retest the lows of 1930 before it actually started moving higher. And this time, if it touches 1930, you can clearly see the range is expanding, so you will get a big sharp price action. So 1, 2 and 3, and if it hits 1930 this time, next time it will swing up to $2,000 or 2010, 2020. So this is something which we are going to look at as far as gold futures is concerned. Okay, so this is what we have. And last but not the least, let's go and check out the VIX, so CBOE volatility index, because you can clearly see there is a sharp decline. So when the equity market is going lower, so does the volatility. It does not indicate a big crash. It is not at all indicating a big crash, because the volatility is not indicating that much crash or a big crash or indication of big crash, because short-term correction, intraday correction, or correction for the couple of days is not a very big thing which we can expect or which we can take confirmation from VIX. But in this case, VIX trade below 15.48 and more specifically below 14 is actually giving you a better indication about the market. And if it continues to trade below 14, if VIX continues to trade below 14, then there is a potential that it may move towards even 6. I'm talking about the weekly chart, so it's not going to happen fast. It will take its own time, maybe couple of weeks, maybe couple of months. But this is something which we may look at if it continues to trade below 4 or in between. If you don't consider 6, I think if I look at the big chart, so it will never go to 6. The last we have is 8.85. So this is what we can expect, rather talking about 6. So let's expect the VIX to retest the lowest end of the range before it actually started moving higher. So what we are looking at on the upside below 14 is in between 9 and 10. So don't bother about VIX as of now. I'm not saying the big trend. As of now, the VIX may hit the lowest end of the range moving forward. And what we have as far as the overall market for the next 1 week is a slight bit of correction, but maybe giving you a better opportunity, because as far as dollar index and the big chart of dollar index is concerned, you can go and check out my video that will give you a clear view about the dollar index and so about the market, not only the US market but the global market as well. So this is the end of the video. Thanks for watching.